Bonk is a very fascinating token because when we look at on-chain data, we can see how the token is evolving over time, how trading volume is shifting over time. In this video, we are going to look at on-chain data to see what are the retail investors doing, what are the whale investors doing, what's actually driving the price. Now, this is not the first video on Bonk on this channel. I published a video on the 20th of November 2023. That was when the price was still over here. Since then, we have rallied quite a bit. I try to be early on this channel. I try to look at objective measures. If you're interested in that kind of content, feel free to subscribe. I publish videos regularly. Now, let's have a look at the recent on-chain data. What we see on the left is the number of wallets that hold at least 50 million Bonk tokens. So at the current price, that's roughly $1,000, a bit less than that. In the middle, we see the number of wallets that hold at least $10,000 worth of the token. On the right side, we see the number of wallets that hold at least $100,000 worth of the token. Isn't that fascinating? The number of retail investors tends to decline over time. The number of medium-sized retail as well. The number of whale investors is somewhat steady, but there is a peak, right? Have a look at this. The peak happened in the middle of December of last year. This is where retail momentum clearly shifted, where the number of retail investors left the Solana chain. Have a look at the price development relative to Solana for Bonk since middle of December of last year. It hasn't been too great. The price went down by 60%. The number of retail investors, though, only went down by roughly a third. Now, I believe there are two effects at play here. The first effect is simply that people moved over to new meme coins, right? Meme coins that are smaller in market cap. So there is a bit of a rotation happening from old to new, from the meme coins that already have a lot of realized profit to the meme coins that have more profit potential. The second effect is that a lot of the supply of Bonk now moved off-chain. It moved to the centralized exchanges. So have a look at this. This is the liquidity on-chain on Solana for Bonk. And the largest liquidity pool has $2.4 million worth of Bonk and Solana. And the 24-hour trading volume is $264,000. But have a look at the trending tokens. The major tokens have much more liquidity. So Cat in the Dog's World, for example, has $29 million worth of liquidity on-chain, while its market cap is much smaller. Its market cap is only 1/4 of Bonk. This, by the way, is the ranking of the largest meme coins. Bonk is at number 5. So clearly Bonk used to be a decentralized play. Now it's mainly held by the big guys, by the centralized exchange whales. And so I believe that's the major shift that happened since beginning of the year. Most trading volume is now on Binance and on Coinbase. And not all of the tokens that those exchanges hold are customer funds, right? A lot of this is also for market making. It's very hard to estimate what those centralized exchanges are going to do with the token, right? They can really manipulate the price both up and down. And I don't want to necessarily speculate on manipulation. I like to speculate rather on adoption. Now, in the last month, we haven't seen that much adoption, right? This is different blockchains with its total value locked change. And we're seeing mainly red across the board. Solana didn't lose as much as most other chains, but still, times haven't been too pretty. And so I try to approach this market somewhat differently. I don't try to find this one asset that might outperform. I don't try to speculate on centralized exchanges manipulating prices up. I try to bet on falling prices. Since most altcoins are now falling, I bet on falling prices of altcoins that have a very quickly expanding supply. For example, something like this. I'm making money while this asset is going down. Since beginning of the year, we have already declined by 76% under very little volatility. If I have a look at this asset, I'm also shorting this. I'm also betting on falling prices of this asset. Since beginning of the year, it went down by 63%. Again, under very little volatility, and this constant underperformance happens because of an increasing token supply. And so I believe the way to make money with crypto is not necessarily to hunt the latest meme coin. It's to bet on constant underperformers, because that's much easier to find. If we can make money from underperforming assets, why not do so? Why not have the odds in our favor? Now, it's not necessarily easy to make a 10x within a week with this, But still, right, the returns are very attractive, especially compared to traditional finance, and especially because we can deploy quite a bit of capital into this. This is not just buying lottery tickets, this is actually betting on fundamental tokenomics. And so if you want to know what kind of assets I'm shorting, feel free to check out the premium membership. This is also where you'll find tutorials on how to set this all up. If your crypto portfolio can't yet justify premium, then feel free to check out the free Telegram. The link is as well down below. Looking very much forward to seeing you there as well.